Welcome to the mutual fund series. Today I'm going to be reviewing the Edelweiss recently listed IPO fund. This is actually a close-ended fund which is being converted into an open-ended fund. So what this fund really does is that it basically invests in the last 100 IPOs, and essentially the selection process is that they choose 80 to 100% of exposure in ideas from the last 100 IPOs. From that, they basically filter it down to 30 to 40 ideas across sector and market cap. And of course, there is a bias towards mid and small caps. The sizing of the allocation is going to be based on the conviction of the fund manager, and there is a regular rebalancing of the portfolio. Now, this fund falls under the multi-cap category, of course, very high risk category. The fund size currently is around 522 crores and the expense ratio currently is around 1.4%. So this fund is really trying to capitalize on investors' interest in investing in IPOs. The main premise being that typically investors, when they invest in IPOs, they really don't get access because of the allotments being very low. Again, not all IPOs perform, and investors tend to just go in for most IPOs, but not all of them perform. So basically here you have a fund manager who's going to take care of that selection process for you. And many a times investors tend to exit from the IPOs, whereas there are some good IPOs that also have some good post-listing gains as well. The fund has outperformed its benchmark and the indices, which is Nifty 50 and Nifty 500, over different periods. But should you invest? While the fund is actually giving you access to IPOs in a better way, because you don't need to invest in 10 different IPOs and you don't have to track what happens to them. At the same time, the fund manager is selecting these particular IPOs for you. But I think there are some big issues with this particular fund. Firstly, it's a thematic fund, and if you've seen my other videos, you know that I am not in favor of thematic funds, specifically this fund, because I think it has a very, very narrow focus of only going in for IPOs. Now remember that most IPOs come during bull markets and they come at very lofty valuations. Again, if there is a good IPO, then certainly even fund managers will be considering it for their regular funds. So I'm not really sure whether you need to get into a fund which is specifically investing only in IPOs, because any good stock out there that has a potential to perform is going to be part of the regular funds itself. And these days, the flexi cap funds, if you are in a flexi cap fund, you are going to get the small and mid cap exposure in those funds as well. My take, well, I would say stay away from this fund. I do see investors wanting new type of funds. Remember, investing is not about having excitement or finding something new all the time. It's about staying with the simple, boring stuff. That's what makes the money. So stay away from this particular fund. Make sure you click on the bell icon to subscribe. We do look forward to your feedback. Till then, bye-bye.